Securities and investments discussed are for educational purposes only. We do not sell securities. Each investor is responsible for their own decisions and must evaluate investments according to their investment risk tolerances. Opinions expressed are those of speakers and no one else.
All right. And then so tonight's speaker is a longtime contractor and serial entrepreneur turned multifamily investor. He is a general contractor who is putting his talents and money to work in the build for lease market. As a child, our guest speaker had a stutter that required years of therapy before he could speak and be understood. He grew a thick skin, a keen right uppercut, and an empathy for others. After being chosen for the, quote, Rocky Squad, end quote, in 1980, a fitness encouragement group that traveled between schools, George began coaching children in various sports and after-school activities. Those activities continue today. When our speaker was 20 years old, he began to help raise two boys, Jordan, who was 4 at the time, and Justin, who was 1, who are now 34 and 31. Today, Jordan is a combat veteran Marine that now has 2 children of his own and has an IT security career. Today, Justin is enjoying being single and works for the U.S. Postal Service. Their mother is in heaven. In 2005, during a time of personal adversity, our speaker formed, incorporated, operated, and then handed off a successful local children's nonprofit. In 2000, our speaker helped build a community center in Huancayo, Peru, after the elimination of the Shining Path terrorist group in that region. In 2010, our speaker helped build the first of many community centers outside of Siem Reap, Cambodia. Currently, our speaker is a single father of an 11-year-old daughter, Taylor Rose, whom he happily cares for more than 50% of the time. Taylor Rose is a bright child who has always participated in her dad's business. With all that said, it is no surprise that our speaker's favorite quotes are, quote, in the middle of difficulty lies opportunity, end quote, and quote, God is good all the time, end quote. Our speaker says his superpowers are intuition, coaching, public speaking, problem solving, and operation systems. Without further ado, tonight's speaker is George Knowlton. Currently, George operates a holding company, Smile Company LLC, and a construction company, Squared Up Construction Inc. So with that, take it away, George.
Thank you for that wonderful introduction, Max. That was fantastic. And thank you all for having me here. I'm humbled to be here with you all. We have had some wonderful speakers here with fantastic pedigrees. And like I said, I feel humbled to be here with you and to share the bit of knowledge that I have to share with you. And tonight we are going to talk about small multifamily development. And we're going to talk about the joys and the benefits of it, and how we, as our group, and in burgeoning and investment in multifamily, how these small multifamily developments can help us, and then maybe how we can get investors to actually help be there with us, because a lot of large investors are not as excited about these small multifamily developments as we are. So that is kind of the basis of what I'm going to talk about today. And without further going any further, do you may have any questions about that? Comments? I will share my screen here with you. Share. Share. Can you guys see my screen?
Yes.
Yes. Okay. So again, I am George Knowlton from Square Up Construction Incorporated by Smile Company. Smile Company is my holding company. Square Up Construction is my building company. I come from a building background. So my building is investment is the second part of my business. Building is the first part. So I come from this not from an investor's perspective, but from a builder's perspective, growing into an investment manager or asset manager, as you would say. So Smile Company, again, is a holding company. Square Up Construction is the construction company. Is as we are looking at these small multifamily developments, building is very, very important. And what is a small multifamily development is really the biggest piece here. And really, there's four things that I look at when I look at a small multifamily development. I'm looking at less than 100 room hotel buildings. I'm looking at less than 100 room apartment buildings. I am looking at less than 25 home rental buildings. And I'm looking at duplex, quadplex buildings. Now, when we break these four categories down, and you notice there's four blank categories here because there is other categories in this small multifamily development group, but we're just going to focus tonight. I'm going to focus on these four. So, and these four, the reason why when we quantify a monetary value of what is small multifamily development, I would say, in my opinion, small multifamily development is anywhere from $5 to $15 million development. And so that's where you get the 100 room hotels, you get the 100 room apartment, you get the 25 homes. The duplex and quadplex buildings are much, much less than that, which is a very different type of investor. And a lot of what we're going to talk about today, this evening, is more about the top three. The bottom one, all of this applies, but in a little bit different fashion. Does anybody have any questions so far? Am I on track so far? Can you guys hear me?
Yes.
Yeah, we can hear you.
Okay. All right, cool. All right. So I'm going to move into the three common revenue characteristics of small multifamily development. All right. And these are things I'm sure you've all heard before. If you've been out talking to brokers and you've been talking to people looking to invest in your projects, you've heard that these common revenue characteristics of small multifamily development are not enough revenue to pay for amenities or property management. There's not enough revenue for advancement to attract or retain employees. And there's not enough revenue to attract qualified investors. We have to, as asset managers, we have to really tackle each one of these three, or the three things that our investors are going to be coming back to us and saying, well, prove to me that there's enough revenue to pay for these amenities and property management that the other places have. And these are very difficult things to prove when you have not enough doors to create the revenue to pay for the amenities. So these are things that we are going to be discussing tonight as we move forward. Is not enough revenue to pay for amenities and property management. How do we tackle that? That is something to be thought about. Like if we have 300 doors and we're taking 5% or 3% of 300 doors and putting that towards amenities and property management, what happens if we go down to 100 doors? The amenities are much less, the property management is much less, but is the work really less between, say, 50 doors and 100 doors? I would say the work isn't much less. The work is about the same, but we're not getting as much money for it. And that's why investors are not as excited about these projects. As we're looking for these ways of revenue, we notice we've had two key words that have come up so far. We've had buildings on the beginning, and if I'm going to go back here and bring them back to you, right here, you notice every single one of these four hexagons have the word buildings in them, right? Our business is primarily about buildings, not necessarily about people. It's about buildings and location. The second word that we've got is revenue. Revenue is another big word for us. Buildings and revenue are the two biggest commonalities for us in small multifamily. These are the two keys that we have to really, really pay attention to. So that brings me to where we are here, and that in our lives, we have stages of life and they're universal. We all start in the long-term living with our parents, typically in long-term living, unless of course we're maybe in the military or something like that. We move around a lot. Typically we have long-term living as a child. Then as we become an adult, we move into transitional housing where we're either in an apartment or we're in a dorm room or something like that. And then we're into short-term, which again could be an apartment or it could be a leased house or something like that. And then we're moving back into long-term. But this cycle never changes, because then even if we get into long-term, as we own a home and we have a family, we're still most likely going to transition into an elder care facility or something of that nature as we get older. So as investors in multifamily, if we can take advantage of all of these stages, and when I say take advantage, I mean take advantage in ways of helping society. You can tell by my bio that really my passion is helping the people of the world, right? And so if we as investors in multifamily are here to help the world and help those people, then what we want to do is provide spaces for them to live during the different stages of their life that are equitable and are good for their lives. And if we do that, we will be profitable as well. So I just want to be clear that when we take advantage of things, we're taking advantage of a need, we're filling that need, and then we create profit from filling the need. So transitional, short-term, and long-term housing are the three housing types that we have. And from my belief, if we're going to do small multifamily development, we need to have all three of those housing types in the development to create the positive cash flow that we need to challenge this revenue challenge that we have with small multifamily developments. Okay, so the cycle of housing is the same as the cycle of life: transitional, short-term, long-term. We just keep going through this cycle. So duplicable, high ROI, small multifamily developments are created by blending housing types. Okay, so I'm going to say that again. Duplicable, high ROI, small multifamily developments are created by blending housing types. The different housing types, main categories that I have identified are transitional housing, which is transitional. We're talking about mental health facility. We're talking about like drug rehabilitation. We're talking about physical rehabilitation. We are talking about maybe a separation rehabilitation where people have to be separated and then they can come back together as a family, things of that nature. That's all transitional housing. Short-term housing could be a number of different things. It could be just a hotel stay. It could be a 3-week stay. It could be a month stay. It could be any of those types of short-term vacation business people, people that need furnished places. Those are typically our short-term are going to be people that we're either going to be in a furnished unit or are going to be like business type people. Long-term is going to be our traditional renters, our traditional apartment renters. And of course, those terms, we're going to want them to be a year term because that's going to stabilize our investment. The idea is to create extra revenue from the short-term and transitional and medical housing and create the stability from the long-term housing. And again, so we have 5 different pieces: traditional, short-term, long-term, furnished, and medical. Transitional and medical are somewhat similar, but transitional is paid for by the state. A lot of times we can get state grants and all of that. So it's constant, consistent money. It's paid every month. It's paid whether the people are there or whether they aren't there. The medical is more paid by insurance, and those are even higher rates that we get on a daily basis. So if we take our property, for instance, actually, let me go back for just a second. So does anybody have any questions about these 5 pieces of the multifamily developments and the 5 pieces of housing types?
Yes, George. How about assisted living facility? Where does it fit in your 5 types of housing?
Say that one more time.
Where is assisted living facility fit in your? Does it fit one of your five
Yes,
housing
assisted
structures?
living in itself does not fit in the five. It would be in the medical and in the transitional. So in the multifamily, in the assisted living, I don't have a place for assisted living in multifamily. I have a place for transitional medical, which would be assisted living for a short period of time. In other words, somebody gets out of the hospital and they need to stay in a one-story place where it's wheelchair accessible for a few months, or where the medical staff can visit them readily. That is provided for in the small multifamily model.
Yeah, because
Assisted living.
it's possible that, let's just say, there's a son and he could not take care of his dad anymore, and and his dad is getting old, so he places his dad in a assisted living facility for his dad to live into.
I think that that is a definite possibility. I think it's a definite possibility. I think it does fall in the medical circle.
Yeah,
Actually, I think it does fall in that circle. The challenge that we are working with here with having these five different types in being in the small multifamily is that when you have a small multifamily unit, you still have to have an office staff. And a lot of them, you still have to have somebody on staff all day long. And for
yeah,
something
yep,
less than 100 units, that's a lot of money. But if we're doing transactional business all day long, well, then now my staff has something to do, and I'm getting
yeah,
increased revenue from them for doing that. So,
yeah,
yes, I think that assisted living could be a part of it, in, in a basis, but the idea and the thrust of this strategy is to create work and additional revenue for the
yeah,
property management that needs to be on the property, so that we solve the revenue shortfall that comes with not having enough doors on a piece of property. Does that make sense?
yeah. Okay, thank you.
You are very welcome. You're very welcome. I hope I answered your question.
Yeah. Uh, Let me just add something, because I have some rel- uh, relatives in California, and they own some small houses, and they do
Mhm.
ALF, assisted living facility. In each house, they have up to six patients or senior folks who are, and on and all of them are ambulatory. They're still able to move and something like that. Yeah,
Mhm.
and
I
then
think that
and it is the government that pays for their for the rent or whatever you call it.
that is exactly correct, and that is actually that is a different model than this model. But I actually have a model designed specifically for that, because I have done a lot of retrofits for assisted living in homes, and it is not cost effective to retrofit a home, and you don't get what you want necessarily. Um, Building for rent is really where it's at when you're talking about assisted living. And so, like one of the developers I'm working with here in Sacramento, we are taking small infill pieces. And what we want to do is do the small house model that Paul Rogers introduced here to the Geek group. And we like that small model because it is not as regulated, and there is a lot of leasing opportunity. And again, we are about the buildings, so, and not the assisted living. So if we just build the buildings and we lease the buildings to assisted living companies, we eliminate all of our legal troubles with all of that, and the overhead and the staff, right? We just deal with the buildings. So I
Yeah.
really like that model, and I'd love to talk more about that
Okay.
particular model too. But this model is based on a diversification of the lessors that are going to be in our small multifamily, because a traditional small multifamily, by the numbers, doesn't create enough revenue to pay for property management without somebody being there, without too much oversight. There's just not enough money in it for our investors to get excited. So Marriott and Best Western introduced diversified small multifamily development strategies to the multifamily market about 10 years ago. They came into the apartment market. And I'm saying tonight, it's time for us to go get their market, because they came into our market. Marriott put out luxury. They got 7 offerings, premium 10, select 8, longer stay 5 different offerings for Marriott for longer stays. And those longer stays are mostly business people and families that are staying, 1 to 3 months, and they're paying an enormous amount of money to stay in those hotels. So I believe that if we are purposeful in our asset management on these small multifamilies, we can work these things through and actually find profitable models that our investors are excited by, both by purchasing hotels, existing hotels that are actually not in great neighborhoods, and transitioning them to a combination of housing, which a lot of them already are. And I'll just segue into Best Western here, because Best Western is a great example of this. They've got the Glow, they've got the Signature, the Premier, they've got Vibe, 8 and Sadie, they got the Executive, they got all these high ends, right? But I don't know about you, but if any of you have been to any Best Westerns around the United States, they're not all nice. They're not all exciting. In fact, a lot of them are in what I would call at-risk neighborhoods, people doing drugs on the street, outside. There's like a lot of that going on in the neighborhoods that they're in. But what these owners, and I know a few of them that have multiple Best Westerns in not so great neighborhoods, but what they've learned is that if they diversify the people who are staying at the hotel, they make money, and they make a lot of money, and they don't actually do a lot of maintenance either, because of the clientele that they're serving. So in other words, they get clientele from the state, medical. So let me go back here, right here. So typical Best Western in an at-risk neighborhood will have a certain number of rooms that every night are paid for by the county for medical reasons, for either health, housing, whatever it might be. They're going to have a certain number of rooms that they've got transitional housing for people who are in counseling and things like that. Then they're going to have some long-term guests that stay just under the maximum of days that they can stay and become a resident. And then they go stay at a different hotel and then come back. This is kind of where our society has moved to. And so if people are willing to stay in hotels for these reasons, then I say that apartments are actually the best place for them to be. And so, like boutique hotels, the unique nature of inclusive apartment buildings requires a hybrid design and operations management. So what we're used to with apartments is we are used to having all one thing, and we're used to hybridizing the types of rooms that we have: a 1 bedroom, a 2 bedroom, 1 bath, 2 bath, whatever it might be. And I would contend that we need to take that one step further, and you also hybridize the type of lessors and the type of people that you're actually looking for, so that you can increase your revenue flow for these small units and get them to a place where investors will be excited about them. So this unit right here, this one is a real life, ready to build inclusive apartment building example. It's right here in Sacramento. The first floor is 13 doors, and it's got 5 ADAs already planned in the planning. Part of the conditions on this project, and these are the things that you're going to find out as you come into these smaller projects, if you're looking to build them or you're looking to take them over, is you're going to find out they have like rules, like you have to have staff on site 24/7 or something of that nature. In this one, you have to have somebody here on site. You can't have an off-site property management, even though it's only 43 units. And for a lot of people, that puts the revenue out the door. So that's why you have to look for a different method to create more revenue. And that's why the first floor in this one is short-term transitional and medical housing. The third floor is executive and extended stay, and the second floor is your standard apartment lease. And that pumps the numbers up to get our ROI to where an investor will be excited by it. And to the point of Adelman, I'm sorry, I don't want to get your name wrong. I can't see you. Where are you at? Adler. To your point, in all of this as a builder, as I have been looking through and pricing things out and crunching numbers and doing my analytics, what I have found is that there is some developments here that don't work for a standard development. If I'm just going to build single family homes, they don't work. But if I'm going to build a small home, 6-bed care home, well, now all of a sudden those numbers work, right? Because the revenue is much higher in those particular homes. So the value of the homes is going to be more from the get-go.
And George,
Okay.
I have a question. Now, in some
Yes.
of the big cities, you have a lot of homeless people, and the city government is willing to address those problems of homeless people. So what they do is they, like in the city of New York, but I have to validate this. They are looking for some kind of a hotel in which to place those homeless people, but it will be the city who will pay for the revenue. Is that a viable type of business model for you?
Yes. So that is part of the reason why this is so typically, the real interest in these properties is most of these properties are in opportunity zones, which if you hold them for 10 years, you have zero capital gain. So there's some great tax advantages. Even if you hold them for 3 years, there's good tax advantages. And the other piece is that you do get consistent, especially in California, a lot of state help will pay. They'll pay a lot to help house these homeless people. And then beyond that, in the bigger sense of things, is you have this. If think about this, if a person is homeless and they have $100, a lot of times every third night they go stay at a hotel and they pay $100 to stay at that hotel. At every third night. Right. And so why would an apartment building, if I have to have somebody there all the time, why not have that person come stay at my apartment building one night and pay $100? Right. So the amount of money that is coming in each day, you don't have to have all of them there all of the time. Right. And that is part of the thing is that the state does pay and the people will pay too. And as you blend these two models together, you take advantage of daily rates and the monthly rate. So for instance, on the executive and extended stay, the way hotels work is their daily rates are based on supply and demand. So they know what's coming up each day. They get a reading from their revenue manager, tells them, hey, this is what rates are across the city today. So today you're not charging $100 a night, you're charging $150 a night. Right. And then other nights they might say, well, revenue's down, you're only, charge 90 tonight. And so these are ways that as multifamily investors, this is kind of thinking outside the box of the way we traditionally think and have been taught to think as multifamily investors. And there's one other piece that I wanted to bring in here that I didn't put a slide up here for it because I thought this would be a perfect time to talk about it, was on this particular building. So as I talk to investors about this building, kind of our method of getting money is to offer that we're going to take 25% of the equity. We're going to give them 75, right? And then they're going to give us the money for it, and we're going to really not have to do anything. And a lot of the investors that I've been talking with are not interested in that at all. What they're interested in is we keep 75 and we give them 25, period. Right. And so in other words, like on this particular deal, the investors that are coming in and saying, hey, I'll tell you what, we'll give you all the money for this project at 2.5% interest and 25% equity. Right. And then we keep 75% equity and we pay the 2.5% interest on their money. And so there's a lot of ways to work the numbers. And when we're talking about small multifamily development, I think it's very important to keep our eyes open and look outside the box of traditional, especially when we're talking about building for lease. Because right now, buying for lease, I have found is very, very expensive. Very hard to find a good deal that isn't expensive to go over. And just to share a little bit about what I have encountered with this large corporation that's turning all of these homes, and they are, they just got bought up by, well, I don't know, I think the largest corporation in America right now for housing, but it doesn't change the fact that on every project I'm doing right now, their building budget on this on the house I just closed yesterday, they were 46% over their budget.
Wow.
Yeah, 46% over their building budget. Now, that's going to get to the investors sooner or later. Nobody's crying about it now because they've got equity. But you know what? They're going to be crying later. And then me as a builder, I'm noticing all of these little things. Like, wait a minute, you didn't notice this when you walked the building? You didn't notice this? And now you've got all of these extras that are coming up after. Those are things that we as investors, we don't want to have. We want to have all of our ducks in a row. We want to have a good inspection of our buildings when they're inspected. And then we want to have a good budget to start off with, because these small multifamily developments are exciting and scary at the same time, because there's not enough revenue to make up for mistakes. So if we make a mistake, it could cost our investors a lot. So anyway, that was what I had to talk about this evening, was to talk about this different approach, my approach to small multifamily development. What I have found is starting to work, and I've been getting some good feedback on and some good cooperation or good affirmation that the direction I'm headed and that what I'm seeing is actually correct. I'm getting a lot of good affirmation that we're on the right path here. This is the direction society is going. And I think that if we build for this, we're all going to make a lot of money. So that was what I had for you guys tonight. I really appreciate you having me here. And does anybody have any questions about anything that I brought up or anything to add?
I have a question. What I wanted to ask you, you went over a lot, which I appreciate, because what you're talking about is something that I've considered as far as investing in real estate. What would you say is a benefit with small multifamily versus large multifamily?
The biggest benefit is we can get in, Darnell. The big units, we have to have a huge investor to get in, to sign the note. So things that are less than 100 doors, it doesn't take as big of an investor to get us in the door. And there's a little bit more, it's kind of like, if we have $500,000, we can buy 1 or 2 houses. We can't buy 10. And it's kind of the same way with this. With small multifamily development, I feel like it's a way that we can get in the door with investors where they're not putting out a huge amount of money, and we can actually show our worth, right? Because it's small, it's concise, easy for them to see. That to me is the benefit of the small multifamily, is it really does show if you know your stuff. On a bigger unit, you might be able to fake it, You might not.
Okay. And would you go through some of the same channels as you would find investors for large multifamily, like meetups and big events like the UP event, things of that nature, or is there another method?
I think there's other methods. I think that, especially if you're going for very small, I think if you're going for duplexes and quadplexes and things of that nature, I think you really need to be going to more real estate things of that nature, more real estate get-togethers, more investment get-togethers, things of that nature, or actually talk with people who are already in the business of doing that and do that, because you really don't need a lot of money to do that, is the reason I say that. It's not a lot of money, it's a lot of credit and some stability that you need for those. And I think those are a really good way to start, because you really don't need that big investor. You need one or two people to have faith in you that you can do it and you can go for it. And you might even be able to do it on your own if you live in one of the units yourself, especially on the built to rent.
Okay.
Yes.
Hey, George. So obviously, before you delve into something like that, you must have the tools of analysis, like some kind of an underwriting template. Have you developed some kind of special underwriting tool to check if certain investment, if a certain property could be a viable investment or not as a small development investment? Do you have some kind of tools?
Yes. So I use a few tools. So I love Max's tools that he has already offered out to the Geek group. I also use another variation of that tool that was put out by Aria Mentor. And then I also have various tools that I use through building that tell me, what it costs to build. And there is a 3D modeling now that we can 3D model the construction process, and we can see if we're actually on track and whether our estimates of construction costs are on target or not. So yeah, today there is so many tools available that I think we're crazy if we don't use them all. I think we need to use them all. I think any one tool is not the find all be all of tools. I think we have to use multiple.
And another thing that you mentioned is that in some cases it's required that there should be a live-in employee, right? A live-in some kind of a live-in person or employee of yours to be in the unit. I mean, to be in the building, and that will be a payroll expense on your part or on the part of the investor.
Say that one more time.
Sometimes it's required that you should have a live-in. I would say a live-in employee or property manager if it's not really a property manager. A live, yeah. And in many cases, if it's a medical in California, I think he should even be a licensed ALF administrator. I believe so.
Yeah. And so that's why for assisted living, typically to me, we go back to the words that we were talking about, buildings and revenue. Those are the two biggest words. We're not in the business of people as investors. We're in the business of buildings and revenue. And so I focus on buildings and revenue. So if it's assisted living, like for instance, in the small group home, I don't provide the assisted living person. What I provide is the home. I lease it to the assisted living company. They provide the nurse. They provide the risk management. They provide all of that side. So in this case, I think to pinpoint your question, if we had an assisted living person come and stay, say, on the first floor, and they needed assisted living, they need to bring their nurse with them. The person at the front desk is only going to be the property manager, quote, front desk person. Does that make sense?
Okay. Yes.
To hop in here, this is Tyler. I could speak to that a little bit. George, good to see you, by the way. It's been a while.
Good to see you, Tyler.
It's incredibly challenging doing both the business operations in assisted living as well as managing the business end that comes with the construction as well as just the general management. I found out the hard way how challenging it is buying both the house and the business. And to what George is speaking to in terms of owning the building, but then leasing out the building to an outside company that then is providing all the operations and oversight for the actual assisted living facility. That seems like that's the way to go, because the way that I'm doing is pretty messy. George, to your presentation, thank you for presenting that. I really like how you laid out the benefits of having a bit of diversity there with your revenue streams. It makes a lot of sense. You brought up Best Western. And I guess my question to you is, what vision do you have for the branding or the marketing side? When it's all said and done, when it's all built, what do you see the marketing looking like? Because Best Western has so many different products, right? And depending upon which product and how it's presented, it can either give you that aura of, ooh, it's a Best Western, I don't really want to stay there unless I have to, or it could be a little more enticing to the average person to actually go and stay there. So how do you envision that looking when it is built?
That is a great question, Tyler. I appreciate that question. I appreciate your comments. So, and speaking of Best Western, there's a reason why Marriott has, and if you look at the slide, check it out. So Marriott, hold on. Marriott, all of their items are named Marriott. Luxury, Marriott Premium, Marriott Select, Marriott Longer Stay. When you look at Best Western, they're all by different names, and they're exactly for the reason that you pointed out. Because when people hear the word Best Western, a lot of people hear the words Worst Western. They hear Worst Western. Right? So what Best Western did as a marketing ploy is they changed the names of their boutique hotels to different names to differentiate themselves. And so I would take that particular model, and the idea is that I don't think these developments should stand out in the community. I think they should blend in the community. In other words, the people on the second floor shouldn't really know that the first floor is filled with transitional housing, right? I mean, that really isn't any of their business, right? And it really shouldn't be necessarily marketed in that way. I think the marketing is a little more, has to be a little more savvy. So I think each one needs to be named individually, just like we would our apartment buildings, but the strategy and the model is the same.
But wouldn't the residents be noticeable on the property though? So they'll be in the hallways or in the lobby somewhere.
Oh, absolutely. But I think that a lot of it is about the idea there's a lot of social benefit to the diversity of people being in a building. And so if it's not presented as a traditional transitional housing building, then the people coming in for transitional housing will probably live up to the standards of the other people in the building. That is my belief. That's what I've noticed in working with at-risk people and being around the world, is that people will rise to the places that they're living in. And so that is part of my philanthropical part of this, is that, gee, if not only do we solve the revenue problem of a small multifamily, but we also create this beautiful lifting of society at the same time.
Two quick follow-up questions / comments. First one is, do you plan on presenting this to other people? If so, I don't mean to be pointed at the details, but I do think that second slide, I think the greater than and less than signs are flip-flopped. So just a little note in case you are presenting it to others. I could be wrong.
I do appreciate that, Tyler, because you know what? I can never remember which one is greater than or less than. So that is absolutely possible.
I could be wrong, but just something.
Yeah, right. You're right.
The second thing, more of a question to you. This may or may not be something you have an answer to, but it would be really interesting to get a hold of more financials, or what you are predicting, the numbers to look like. Do you have any idea of what the cost per door, or per square foot is going to be when you build this thing?
Yeah. So we are sitting at right now. I have all the numbers already in. I've already put them in the outline that the Geek group does, and that Basically, what we're looking at is we're budgeting for 250 a square foot, $250 a square foot, and we are planning to build it for 200. So 250 is a pretty high number, but we think we can do it for two, which puts the total build out on this particular building at just under 11 million. And the day we finish, it'll probably be worth 12.5, and within a year, it'll probably be worth 20 something. So yeah, right now the investors that are in town here are looking at that property and 4 more. And they are seriously thinking about putting a fund together to take on this one that's ready to build right now. This 43 unit one that I'm talking about is ready to build in the next 90 days. I can break ground in the next 90 days and get going. And then this particular investment group looking for other investors to come in with them too, of course. But they're coming in, they're dropping in. They want to drop between 20 and 30 million dollars here in the Sacramento area, and they've asked me for 5 different properties, one that's ready to build now, and then ones that I can work on moving forward. And those properties are diversified. So like the small multifamily development is a hybrid model. It's a big model, and that's why I left some of the hexagons empty. Like, so for instance, one of the properties that I have here is slated for 42 homes because there's a creek on one side of the property. But I already went and checked. It only cost me $1 million to build a bridge over the creek, and then I can put 84 homes. Well, now I can put in some multifamily. I can put in some single family homes. I can put in leasing. That makes that property pretty good. And everybody was scared away just because of a creek, and there's only one access. Fire department said we can only have this. Well, gee, all it took was a question of the fire department. Like, well, what do I have to do? Well, build a bridge. Okay, I'll build a bridge. That's easy. I get 42 more houses for building a bridge. I'll build it tomorrow.
Problem solver. I love it. Hey, I'm gonna let other people hop in here, but keep us posted. Good luck. I'm excited for you.
Thank you, Tyler. I appreciate it. Come on in with us.
George,
We'll see.
It was mentioned earlier that you had some speech problem earlier in your life, right?
Excuse me?
You had some kind of speech problem?
I
Stuttering
did,
problem?
yes.
And is it during your grade school years or your high school or your college or what? And at what point in your life you felt that you already have passed by that handicap?
That
Is
is
it later in your
correct.
life? Yeah.
Yes, yeah. When I was a young child, I could not talk at all. I could not get a word out. I spent years and years in speech therapy until 3rd grade. I was in speech therapy every day at school. They took me in that class instead of regular class during reading and all of those times. And after school, I attended speech therapy, and then kind of stopped after 3rd grade, and they just dealt with the stuttering. I had still stuttered when I got nervous or anything like that. Very, very bad. But curiously, if I may tell you, kind of what happened in the end was I did a lot of speech therapy, and then I took an acting class at school, and the teacher told me, "Hey, you're not stuttering when you're being somebody else." Why? And I went, "What?" And so then it was just about training to learn to talk with the other side of my mind. And as long as I remember to do that, then I can talk without a stutter. And as soon as I get back to the other side of my brain, then I stutter. So it comes out every once in a while, but thank you for asking.
Yeah. That's good. Congratulations, by the way, because it is
Thank
really
you.
a big hit on your personality if people will tease you about your speech. You know what I mean? And
They do.
sometimes it could bring you down. You feel humiliated, or you feel so bad. You lose your confidence sometimes.
That is correct. You hit it on the head. There was many years that I did not that I didn't like to talk to anybody.
Yeah.
Now I probably talk too much.
You're the man. You're the man. Thank you very much. You're the man. Thank you, sir.
Thank you very much. Thank you all for having me here tonight. I hope that you got something out of my presentation, And I really hope that we can all do some business. I enjoy seeing these smiling faces.
That's so
George.
I
funny,
don't think.
George. That's so funny because
Yeah.
I think I hear Steve Harvey said the same thing. He had the stuttering problem, and that's what he did. Think about other stuff and got rid of it.
Yeah. It was very cool.
I do.
Yes, Mary.
I do have a question. Well, I just want to say about those Best Westerns Plus, they are all here in Houston. And you're right. I see a lot of people that stay in those. And I actually got one guy off one day. I asked him, he was like, I've been staying here for 7 years.
Yes.
7
It is.
years.
Isn't that crazy?
We do have a lot of motel that a lot of people stay. It's so easy to get in a just stay in a hotel because of rents or something wrong with your background or like you say just homeless. It's easy to just go into a hotel for about a week and stay, and they pay those rates. But there is a lot of here in Houston. I mean, I didn't even know it until I really started driving. But yes, a lot of people stay. I'm not sure if they got the, like you said, senior citizen at the bottom, but I know just like truck drivers, they come in and they may stay for like a month or two, and
Yep.
then they leave on the road. Have y'all built anything in this area?
We have not built anything in Texas, no. But I'm telling you that your story is nationwide because we do the same thing here. My significant other here is a hotel manager for the Red Lion and used to be for Best Western. And I'm telling you, her hotel is about 30% filled every week with contractors. Long-term stay, right? These are all constant cash. And a lot of them don't need their rooms cleaned. They don't care. They just want a nice place to stay. And so that is where this model kind of came from in my brain was, my goodness, these people are all looking for the same thing. And this is a way increased revenue, daily revenue, than what we typically charge an apartment for an apartment lease.
Right, because they can't afford the lease or they don't have the payment. You got to I mean, it's a lot of things they don't have just to get into an apartment, and that is an easy way just to keep a roof over your head for the time being. Even medical reasons, people do come down here, like MD Anderson, because they have, they go get treatment, and I tell you, Best Western Plus, or they house them over there.
They do, and they get help from the state and help from the insurance, and yeah, those are things that we can take advantage of in the multifamily, in these small multifamilies that I think increase revenue and give us the ability to offer better amenities and offer our staff. And this is the other piece that we really haven't touched a lot on here. I touched on it a little bit, but I didn't touch on it a lot, is that staffing is very difficult for small multifamily because there's nowhere for the staff to go. I mean, think about it. You have a 100-unit apartment building. Where does the apartment manager go from being apartment manager? And how much more money can they actually make year over year? So like, how exciting are you going to get for an apartment manager, right? You're not going to get a great one because they know it's a dead end job. Like there's nowhere to go, right? If you have 5 different properties, or if they're able to work into some other position, or they're able to make sales and get bonuses and things of that nature, well, now you've created some excitement in the job. You might actually get more qualified people, because that is the other rub, is how do we get real qualified people to be our property managers, especially on these small multifamilies where we have to have somebody on staff on site, but there's not enough rooms to pay for somebody on site. So, and a lot of the cities require that, especially in these at-risk neighborhoods.
And one more, how are you getting the government involved? Like for medical wise, are you doing it, or the people that's over it?
The operations managers would be the people that do it. So the revenue managers are the ones who go in, or the sales managers, and they make contact with the state, they make contact with the hospitals, and they make agreements with them. It's not difficult at all because the county is always looking for people to do it. And that's, because it's the county and the state, they can't discriminate. So
Okay, so
you literally just have to apply.
Okay, so the only thing, like you said, you do is you go out there and build revenue, correct?
That is correct.
Okay.
That is correct. That is the direction that I have moved, just because it is very difficult to find in California, especially. It's very difficult to find built buildings at a reasonable price, and the society is changing. What people want is changing. And this transitional housing, this model, this combination model is getting more and more and more popular. It used to be maybe 3 or 4 people would be staying long-term at the Best Westerns. Now you're talking about, maybe 8, 10, 20 people in a 100-unit hotel actually basically living there. And I think that's coming more and more common. So I think if we hybridize our small apartment buildings, we're going to make a killing.
Yeah, it's definitely in Houston because it doesn't cut it for the elderly. I'm being real with you. It doesn't cut it for the elderly. They don't have just to get in, like I said, just to get into place is they got a big old line, a waiting list for somebody to get in. So I can see it that way too.
Right. And I'm also not opposed to I think this model works for existing buildings as well, existing small apartment buildings, particularly ones that the rooms are smaller than what people want today. So today, if I was going to build you an apartment building, I'd build you an apartment building with 1,000 square foot or bigger, and 2 bedrooms, 2 bedrooms, 2 bathrooms. A lot of these, like this particular one, 43 units, the reason why it isn't built yet is because the rooms are 850 square feet. So they're not built for people who are going to go stay there for a long time. They're built for people who are going to stay there for a few months, maybe 6 months, and they're going to transition into a bigger house or transition into something else. So this strategy is based upon taking the available properties that are out there that we're looking at and then using the model to make the properties profitable, because they're not profitable as they sit. Does that make sense? As where my mindset's at? There's a lot of these properties. Yes.
Are they like micro units?
Say that again, Mary?
I said, are they like micro units?
They are smaller units. They're not huge. I mean, they're not tiny.
Okay.
850 feet is pretty big, but it's not like what people are wanting today. People are wanting space, but not everybody can afford space. And so we need to build for people, build what they can afford. So this particular building, the apartments are sized to be able to rent at a price that people in that neighborhood can pay.
Okay.
If that makes sense.
Yeah.
Yes, sir, Max.
All right, I got a series of comments and then some questions embedded in them. So first of all, I want to compliment you because I'm always we need to be more creative and less competitive, right? So I feel you're definitely pushing the creative side of things and trying to look at the future of where we're heading and trying to get involved that way. So I like that a lot. Number 2.
Thank you, Max.
Okay, and number 2, my wife just finished a doctorate degree at USC, and 2 of her classmates did their dissertation on buying old hotels in the middle of nowhere and turning them into government paid medical facilities, and they bought one in the middle of Tennessee, kind of in the middle of three big cities that were literally in the middle of nowhere. They paid $2 million for it, and it was owner financed. It was kind of a steal. It's not a good hotel right now, but they wanted to rehab the rooms and take outpatients from local emergency rooms from these cities. So if a homeless person shows up at a hospital and has an emergency, they're required by law to take them. So they want to get them off the books as quick as they can. And so they're willing, instead of paying $5,000 a night to have them in their facility, they'll pay $2,000 a night to put them in one of these hotels, and they'll bus them over in an ambulance. And so we talked to this couple for a long time. They did their dissertation on this. They actually met each other at USC, and during this degree, married each other just recently in the last month. And they bought this hotel, and they're in the process of this. Now, we talked to them as the Geeks in terms of looking at, would we buy the hotel and them operate it? And when we saw what they were talking about, number one, our eyes just started bulging out, because they were talking about thousands of dollars potentially per night, per room. You know, they're looking at this hotel going, the revenue projections were ridiculous, right? You didn't need an underwriting template to run a calculator. It was a 120 bed hotel. And you start plugging in any numbers into that, and I don't care what you buy it at, you're going to be flush with cash if this is real. They knew she had owned, Catherine had owned a medical company prior, so knew and understood the requirements for billing for these types of units. And so anyway, I'm making some comments here, but I'm a little bit familiar with this. That's number two. Number three,
I like it.
you know, that kind of goes back to this, where you're saying you want to do the building and then lease it to the operators, and your investors are going, no way, I'm going to see some of that revenue right there. And that was our big thing. They didn't really want to partner over that issue, and we just couldn't. There wasn't enough money in the building for us. It wasn't attractive at all building wise. It was attractive because of the business in it. So that for us created a little bit of a rub there. But you're back to the same thing that Alice and Doris were talking about on a prior call, where they're buying apartment buildings. They're doing long-term leases to nurses and construction people. They're furnishing so many units they're furnishing, and they're doing this multiple lease strategy, just like you're talking about. So I would say they're proving that concept. And then the building that you mentioned, your building that you've got ready to build right now, the 3-floor building, interestingly enough, it looks like your floors are designating the different type of leases. Is that right? You're separating those leases by floor?
Yes, I thought that would be the easiest for sure.
Yeah. And so if you've
Doesn't
got those
have to be
medical,
the way that I did it.
yeah. Well, and interestingly enough, you're putting the different types of leases and building types, if you can stack them, right, and separate them that way. It's easier for my brain to start to think about. I kind of wish you had dropped in some calculations on floor 1 at the number of units times what you thought that would rent for those purposes, and then floor 2 and then floor 3. I kind of wish you had done that here, but of course you can send that to us later, I know. So and then are you trying to, so there's some comments and then here's some questions. Are you trying to syndicate that development, or are you trying to JV that development? Which is that going to turn out to be?
It's probably going to be, it could be either or. Right now, I want to get the development done. I want to close.
Yeah.
And so I'm working on both.
You don't,
so I have
you
investors
don't care which
here that
one.
just want to,
Yeah.
right. I don't care which one, as long as it is the right equity split, right? I want to build it, and whether we syndicate it or whether one person comes in and finances it, it doesn't matter.
Okay. Well, so that's where I'm headed with all this. I think it's very interesting, and it might be that we're headed these directions. And I still am a little vague on the syndicate versus JV and sort of the opportunity there. And it goes back to the assisted living facilities that Paul was working on too. I'm a little vague about how that plays out for the investors. I feel like the experience we went through with Patrick and Catherine brought us to a point where we said we had to have a piece of the business to make the building worth it. But you really think you can do the building part separately, and that's attractive to investors, and then still master it or to the operator, and that whole thing is still attractive in your mind, the way that's splitting up.
Yeah, so in my mind is this way. So and to put it on a smaller term, Max, if I leased a 6-bedroom house to a family, I might be able to lease it for $3,000 a month. If I lease a 6-bedroom house to a business that's doing assisted living, I'm going to lease it to them for $6,000 a month, because I'm going to have more maintenance on that, and it's a purposeful use. And so it's going to have to be renovated to be purposeful, right, for that particular use. And kind of my theory on that is, yeah, the nurses have a great business, but they don't have a business if they don't have a building. And so there's not that many of those $2 million buildings out there. And so, and most of them aren't savvy to go find buildings. Tell me your friend's name again, the couple.
Patrick and Catherine.
Yeah, Patrick and Catherine. So Patrick and Catherine are actually pretty savvy, but most of the people in that business don't do real estate. They do nursing. And so I think that there is plenty of money in the building, because those people aren't going to want to go find a building. They're not want to maintenance a building. They're going to be more than happy if they're making 10 grand a month to give me 5 grand a month and not even think about the building.
I agree with you that they're unusual in their perspective. In fact, they were looking to buy a smaller shopping mall, possibly, to implement the same strategy.
I think it's a great strategy. I think there's a lot of different strategies that these are coming about more and more with different asset classes, for sure. I like both of those, actually.
Oh, very
Now, tell
interesting.
me, honestly, what do you mean by JB, Max?
Joint venture.
So for me, joint venture would be where your partners are
JV.
putting in money and they're taking a tenants in common. It's a TIC where they're on the deed to the property as, so many % owner according to how much they put in, versus a syndication where you can separate out the general partners and the limited partners and take investment money and keep those limited partners off the control of the property. Right now, I know I got lots of friends doing JVs where they've written in an operating agreement. I always think that's wishful thinking, because in my real estate license, I know what it is to sign on a deed, and those individuals in a JV actually have control of the property, even given an operating agreement that says otherwise.
That is correct. And so, for instance, on this particular deal, what I'm working out with the gentleman here in town, the developer here in town, what we have tentatively talked about is he and I are going to retain 75% of the equity as a JV. And we're going to bring in an investor, whether it's syndicated investor or one investor, for 25% of the equity. And they're going to give us the whole amount, the 11 million, and they're going to get 25% of the equity. And they're going to get 2.5 to 3.5% interest on the money during the time that we use it. Simple as that. And we have a couple of different exit strategies. We have one exit strategy at 2 years. We estimate the value will be about 24 million in 2 years. And then we have an exit strategy in 10 years. If we really want to, because this is an opportunity zone. So if it turns out to be the cash cow that it could be, we don't see a reason why we want to sell it, but the investors may want to, like the guys who are in town here, they're looking at a 3-year timeline. They want to come in and put money in, and that's why they want something to build now. So they want stuff at a 3-year, at a 5-year, at a 7, and at a 10 timeline as we invest their money. So that's what I'm looking at. But I'm looking at having the right people in this first deal. I want to have the right people in here that have the right expertise to deal with all of these little pieces that are that are going to be coming, that honestly are not part of my wheelhouse. The building is part of my wheelhouse. All of that part is full in hand part of my wheelhouse and the development. The actual pieces that you're talking about, Max, are pieces that I definitely am going to be seeking a lot of counsel on.
Okay. All right. I defer to Charmaine.
Okay, I was
Charmaine?
thinking when he mentioned short-term housing, I was thinking also on Airbnb. Would that be included in that?
Absolutely. Why stay at a hotel when you can stay at an apartment with a furnished house? It's the same thing, right?
Mhm.
Absolutely. I would, yes.
Yeah,
Taking
because
advantage
that's
of
one of the
all of
trending.
those revenue streams.
Yeah, that's one of the trending thing right now.
Yep. And that's part of the reason why I put the furnished executive units and that on the third floor, because I figured that the views would sell the rooms.
Okay, great.
Right.
Think out of the box. That's what it is.
That's what it is. We got to keep on trying, right? Right.
All right, Darnell, take it over.
Are you
All
there,
right.
Darnell?
I am here. All right. So this time we're going to wind things down and we're going to do our rate and wrap. You're rating the meeting, not the person.
9 for me. 9.
I'm jumping in with a 10.
Ten as well here, George. Thanks again, and hope to get some updates and talk to you soon.
Yes,
George.
I will get financials out to everybody. I will put them out to Max so that you can get them to everybody.
All right, you're the
There's a
man.
10 for me.
Okay. I'll say a 10 as well. And I'll be looking forward to getting the information. Very interested.
Yeah, I give it a 10. Thank you, George.
Thank you, Pedro.
If it's me, I'll give you a 9.5. Everybody giving you 10, I'll give you a 20. I mean, that is a great strategy. I'm not gonna lie to you. It's crazy, but it's happening.
It is crazy and it is happening.
I want to change my rating because of the speech problem, because of the speech aspect of this presentation. George, you're a great speaker, man. So I'm giving 10.
Thank you. Thank you, CM. I appreciate it.
He wasn't George. y'all.
although I still would love to see your tools of underwriting. What is it? What have you customized in the tools to fit your
Gotcha.
business models? Yes.
I will share. I'm happy to share.
Yes, sir. Thank you, sir.
Adler, you're just trying to get a hold of more Excel spreadsheets, aren't you?
That's too funny.
All right. So, what's next?
All right.
Darnell.
All right. Thank you again, George, for the information. Very informative, very interesting. Again, thank you everyone for being in the meeting tonight. And that's it.
All right. You guys all have a great evening. Thank you all.
All
Thank
right.
you, George.
All right.
Thank you. Have a
Have a
good
great
night.
weekend.
Thank you. Thank you, Darnell.
Have a good weekend. Bye,
Welcome.
guys. Thank you.
Bye-bye.